Hello, everybody. Welcome to Talk About Houses. I'm Todd.
I'm Juana.
Okay, so article from Forbes just came out today. The title of the article is Up From Here, the free fall in housing market demand just concluded, says Capital Economics.
Right. So supply and demand. If demand is up, that's a good sign. That's a good sign regarding our real estate turnaround, right?
Yeah. So we're just going to focus on this report that came out. Capital Economics is a research firm. They specialize in macroeconomics, specifically real estate, and we're talking about national numbers. So don't get upset if the numbers don't match what the house down the street did, because this is aggregate national numbers. Okay. So one of the first part of the article said there might be some good news for builders and agents. Research at Capital Economics believe housing market activity is bottoming out. Okay, why is this good for builders and agents?
So agents are very happy because the more transactions there are in the marketplace, the better their revenue, right? Because we get paid primarily by turning transactions, right? And as far as builders are concerned, if consumer demand is back, then they can build homes because they have buyers for the homes that they're building.
Yeah, exactly. The next part of the article, there are growing signs that the housing market activity may be close to a trough. The decline in mortgage rates over the past couple months has led to a small improvement in affordability and a rise in home buyer sentiment, albeit from a record low. Corroborating this, mortgage applications for home purchases have ticked higher in the past couple of months, which should feed through to higher sales. Sam Hall, who's a property economist at Capital Economics. We just did a video on this. Mortgage rates applications were up 25% week over week, like this week, like 2 weeks in a row, the last 2 weeks.
Right. So, the question is this because it's sort of because we had several weeks over the holidays when nobody was really doing anything because people were busy with the holidays. So is this like a pent-up demand situation where then things are going to smooth out again? Or is this a foreshadowing of what's to come for the spring?
And we're going to find out.
Yes,
that's the bottom line. The next quote is interesting. It isn't just Capital Economics. There's a growing optimism among broker and agents across the country. They're hoping that loosening financial conditions, which saw the average 30-rate mortgage fixed rate mortgage fall from 7.37% to 6.09% over the past 2 months, will help give it the looming spring season a little juice. This is the biggest drop in mortgage rates in probably 15 years.
Right.
Mortgage rates haven't dropped. Now, yes, they shot up. We had the highest rate probably ever. Certainly, mortgage rates have never doubled. They went from a little over 3 to over 7.
Right.
And now they've gone from 7.37 to 6.09%.
So, that over a point drop over a short period of time is what you're talking about. That was very rapid. So all of this whole cycle has been actually very fast.
It's interesting that the other article that we did a video on, it talked about how refis are up, because a lot of the people who refied this year who got like 7% plus rates have already, some of them have deals with the mortgage lender where within a certain time period they can do a refi pretty cheaply. So a lot of them have done that. They've refied.
Yeah, that was one of the ways that mortgage lenders were attracting buyers, because of course there were not a lot of transactions. What they were saying was that, hey, go ahead and get your loan with us and we will refi you for free for a certain period of time. And it was actually for a pretty long period of time, and depending on the lender, it was, some of them were a couple years.
Yeah. Now, this is the bad news of the article, but any recovery in housing market activity this year will be tepid. Stretched affordability, because home prices are high and interest rates are high, weakening economy and falling house prices will all weigh in on activity. As a result, we expect 2023 will be the weakest year for sales since 2011 and for housing starts since 2014. Right? Capital economist researchers talk about two things here. 2022 should have been the worst, but the first 5-6 months of the year were just burning sales, right?
Yes.
If we move the calendar year from start in August, maybe go August next year, that would probably be the worst in a long time. But tell me about housing starts. We know that housing starts have been declining for 12 months straight. Sentiment just starting to come back, but still it's going to be a really bad year for building because the home builders still aren't going to meet demand.
Right. The home builders are not going to meet demand for a number of reasons. One, because of course they kind of pulled back last year because of the interest rates. They were concerned. Look, they got burned a dozen years ago during the housing crash, so they're much more cautious this time around. And it takes a while to get spooled back up. Home builders are not fast at getting spooled up. First of all, a house takes 4 to 6 months to put up, and that's once you have the land leveled. But it takes much longer than that to buy the land, get the zoning, get the permits, line up vendors, line up suppliers, and eventually break ground and build a house. So that takes much longer. So that kind of speaks to what you're talking about.
Yeah. The next quote, affordability will remain stretched, right? Capital economics researchers. We think house prices will need to fall a further 6 or 7% to bring affordability back to a level that support more normal levels of demand. This is strictly based on affordability.
Right. So what they think is necessary to bring affordability in line and what actually happens are not, there's really no relationship there, right? Because the economy isn't going to sit there and go, oh, well, in order to get to affordability, we need to do this. The economy doesn't work like that. The economy is much more complicated, and their estimation is nice, but it has really no bearing on what happens in the real world.
Yeah. Through October, the Case-Shiller National Home Price Index says U.S. home prices down 2.4% from the June peak. Before everyone gets upset, this is the national thing. Yes, in markets like Vegas, San Francisco, Los Angeles, San Diego, Phoenix, and Boise, maybe, the super overbought market, the home prices are down by more than that. We're talking about national numbers.
Right.
Capital economics expect home price fall by 6%, while the average 30-year mortgage rate slips to 5.75 by year end. Peak to trough, capital economics expects home prices to fall between 8 and 10% total. That's total peak to trough. That's total from the top to the bottom. It'll be more in Vegas. We know that because we've already seen a lot of that's already happened. We've had 8 to 10% already just in Vegas. Mm-hmm. Peak to trough, even though we're up year over year, if you look at the home prices year over year, we're actually higher than we were last year. We're pretty close to where we were last year, but we're still above it a little bit. Mm-hmm. And even if it falls 10% more in Vegas, we're still where that puts us down to 2021 levels, mm-hmm. which was still, 20% up from where it was in 2019.
Right.
Moody's Analytics chief economist Mark Zandi also thinks U.S. home sales are nearing their bottom, while national home prices have further fallen. So it's just another analyst from Moody's, who's obviously, this is another large firm with a lot of data. Now they're making these global decisions because they are, provide information to companies that are trying to manage assets on a large scale.
Right. And what's interesting to me is that everybody's coming up with similar numbers, which is very different than maybe even just a couple months ago when the numbers were substantially different from one economist to another.
Yeah, but it was pretty bad. Like the worst one we saw was 30%. Was the when we went through like 17 of the predictions, and the worst one was that they would fall 30%. They've all changed. Like all of them have backed off their things. The only people who think more than 30%. Nationally are people make YouTube videos and try to get tons of clicks talking about how the market's crushing, and they're making a ton of money though off those videos. They're just making a killing on the videos.
So clearly their market's not crashing.
Peak to trough, Zandi expects U.S. home prices to fall 10%, with overvalued markets out west getting hit the hardest. That's basically us here. We're one of those markets probably.
Probably. The thing is that markets like Vegas have a lot more volatility, but at the end of the day, I think we also have more appreciation for the long run too.
Yeah, I think so. I mean, the other thing too to keep in mind is Vegas specifically is a market where we have a large influx of people. With 40,000 people, I think, came last year. Year before that, in 2021, everyone fleeing we grew 2.89%, almost 3%. We added 100,000 people to Vegas, and that's sort of led the thing of the home prices shooting up. No matter it's 100,000 people, doesn't mean if the average family unit, 3 people, then that's 30,000 new, homes. So the 40, 50,000 home sales that happened, 30,000 of those were people new in the market, and the rest of them were just churn, people buying and selling within the market.
Right.
So where does this leave us then? So we know demand is going to come back, which is good for us. Remember, for real estate agents, for the most part, don't really care what's happening with home prices. Home prices could be going up, they could be going down. Agents make money based on numbers of transactions, because if home prices are down 15%, but you did 25% more sales, you made more money as an agent. So that's kind of the in the article they say builders and agents sort of like this news. Like the worst thing for agents, the worst scenario would be rising prices and low sales, because prices are rising, which means affordability is becoming harder. You have less sales in the future to make because you're going to have less people, with homes being more unaffordable, and then you have less sales, so you have fixed number of people fighting for clients in a smaller number.
Yep.
Yeah.
All right. So what do you guys think? We gave you some data. We gave you some charts. This is what we like to do. Please tell us in the comments what you think of all this, what's happening in your market, and what interests you. We love your comments. We love your suggestions. And lots of times we do videos based on your suggestions.
Two of the last 3.
There you go. So please keep those suggestions coming. We appreciate them. If you liked the video, if you found it interesting, entertaining, amusing, or in any way enlightening, please like the video, share the video, subscribe, hit the notification bell, and we'll see you on the next video. Bye.
Bye.